Hello and welcome to Your Trades with me, Ankur Mishra and Kavita Thapalyal. And what a day of trade today. After a tough fight between bulls and bears, it seems that bears have finally had the last laugh because we have almost ended at the low point of the day, Kavita. Sensex ending below 80,000 mark and Nifty below 25,000.
Absolutely.
For 500 mark, yeah.
We've seen almost after 4 sessions, when the market began today, we thought that there'll be some kind of a relief. And we did see the market swinging between red and green. But then, yeah, we are settling 271 points lower below 24,450. And, apart from that, the heroes index, we can say, could be FMCG. And especially on the Friday's trade, we saw private banks, energy, financial services were on the gain side. But having said that, auto, realty, IT stock witnessed some pressure, making them the key laggards on Friday's trade. But the entire week has been very volatile. We had expiry and also the Trump tariff activation and implementation. But then having said that, what's up for the next week and how you should be looking at the market and your short-term strategies and long-term strategies? We have our guest with us. We have Rajesh, Palviya, Head Technical Derivative Research at Axis Securities. We also have Ajay Bagga, market expert. Good afternoon and welcome both of you to the show. Ajay, I'll begin with you and I really want to start off with this note where I want to appreciate your game on X. It's an A game, okay? The way you update all of us, your followers and all the market participants. So are you going to take a break this weekend? I really want to understand that. Do you think it's that time or no, you are going to be like, on hands or on Excels also?
No, I think, Kavita, we have Indo-Japan and then Modi's meeting with Xi and then Monday is his meeting with Putin. So you're going to have a very heavy weekend. You can expect a lot of posts. So, but thank you very much. That was very kind of you.
Yes, it's a busy weekend for all of us actually, because all eyes are there whether or not we are able to have some kind of agreement or a formal talks with China, and everybody is waiting for that. But Mr. Bagga, talking about market, we have ended today below 25,500 mark. In the medium to long term, do you think the worst is behind us and we may start moving ahead once again?
Yeah, if you look at quarter one, the amount of downgrades that have happened are amongst the least over the last 8 quarters. So we had thought that the March quarter would be the bottom of the market cycle, but that didn't prove right. Now, what we are betting on is that we are past the bottom, and from here on, there will be some green shoots. So the Indian winter will actually see a spring for the market, some green shoots coming up. Catalyst could be the GST Council meeting. See, if you look at the overall Indian economy, about 180 lakh crores is our consumption basket, out of which about 150 lakh crores is the taxable part. Now, if we get a 4-5% consumption tax cut on that by end of this month, and that leaves about 6 months in the year, you could see a boost of about 1 lakh crores in consumption. And that sets off a virtuous cycle because as people have more money in their pocket, they can either save, invest, or they can consume. Mostly it will go into consumption. Second, the banks then step in because somebody has more collateral to put up. The banks are able to lend more and bank lending goes up. So it sets off a virtuous cycle. We have seen that in Korea today. I just tweeted, Kavita is tracking me, but Korea 8.1% increase in their annual budget they have announced today. Nearly $550 billion of stimulus are going into their economy. So they are recognizing the slowdown, putting in this huge an amount. I'm sure the government is cognizant of it. We need to, even if we have to borrow, even if we have to let the fiscal slip a bit, but we need to put in more money into people's pockets. So for us, it's very easy. If we cut the taxes immediately, we can boost consumption. We don't even need to go and invest too much in the economy, because already infrastructure we have been spending so much. So I think the catalyst will come from GST next week. And then if there is follow through by the government in terms of more stimulus measures, this market could have bottomed out then in this quarter.
So the entire narrative from capex to consumption, I mean, that's the time, and this is what even the street is betting on. But then, how does it look on the charts, Rajesh? How are you looking at the market positioned as far as next week is concerned, and also considering all the fundamental triggers that Ajay counted out?
So looking at the overall structure, it's on the weaker side only. If we go with the rollover data also, the rollover is clearly suggesting that, shorts have been rolled over for this series. We have seen that, the rollover percentage is higher, as well as the Nifty and Bank Nifty both have added the more number of shares in the September series on the short side. For Nifty, the series was ended around 1.2% lower compared to the previous month, as well as the Bank Nifty has slashed almost 4% for this series itself for August series. So I think looking at the short rollover, FIs are net short, and they have added more short contract for this new series. It clearly shows that we may see further more pressure. Even on the technical side also, both indices are now trading below 200-day moving average, which is also sign of weakness for near term to short term perspective. On the daily as well as on the weekly chart, Nifty has broken the important support area. And looking at the short built up in the data, we believe that if it continues to trade below 24,500, we may see further more pressure in the market, and possible down move can extend towards 24,200, even 24,100 in the continuation of this down move. On the higher side, the major supply zone or steep resistance is placed at around 24,700. Uh, until the Nifty not crosses 24,700, we may see sell on rise kind of structure for the market for Nifty. Even for Bank Nifty, it's decisively broken its support area of 54,000 level. And looking at the weekly as well as the monthly structure, the structure is turned on the weaker side. This is the almost second consecutive week where we are making lower high low formation. So it shows that sustained supply pressure is taking place in Bank Nifty also. So we believe that till Bank Nifty not manages to surpass back a bit about 54,000, 54,200, trend is likely to exhibit on the bearish side. And maybe in this down move, it could slide further to 53,400, even 53,200 in the continuation of this down move.
Uh, Mr. Bagga, one more thing which was noticeable today was weakening of rupee. It hit a record low today. I want you to correlate with the market with the kind of outflows which are there, and I'm sure it will add on. Today's number will add on to that. Do you think this trend continuing?
Yeah, RBI didn't step in today. We had seen Monday and Tuesday RBI stepped in and showed up the rupee. What normally happens, towards the month end, today being the month end, and Monday the US markets are shut for Labor Day holiday. So all the dollar settlements were happening today. So there was a bunching up, and the oil payments normally go out towards the end of the month. And we had Wednesday off this week on Ganesh Chaturthi. So RBI was shut. I think today was more a case of RBI letting the market find its level. But RBI will have some level in mind, and you will see bank intervention coming back. Monday, Tuesday, they did. Today, that intervention was lacking. And because of very strong dollar demand, mostly because of the oil payments and month end and the US holiday, all that bunched up. Otherwise, we have been able to absorb, this 2,000 to 6,000 crores of selling in FIs in secondary market. We must remember on the primary market and OFS, money has been coming in. So it's not that it's totally a one-way street that the RBI has had to make up. And also part of the tariff war is to let the currency depreciate. So we'll have to keep a very close watch what other emerging markets are doing, and RBI will let the rupee behave in consonance. China has been trying to catch the shorters by moving in from time to time to bolster its currency. RBI also did it so that it's not a one-way street. But I think it will let 3 to 5% down on the rupee to make up on the tariffs.
Right.
That's the playbook of 2019. I think it will play now
Right,
as well.
right. A quick call, a quick understanding of even the gold prices, that has rallied to a 3-week high. Silver has also hit a new peak above 1,17,000. Now, what's the trajectory over here, Ajay? We are looking at the safe haven demand coming in full swing. Can we say that now?
Yeah, absolutely. Globally, it's coming. See, the dollar is not
Yeah.
so beneficial. People are seeing the policy chaos unleashed by Trump. So one is that. Second, as the Fed cuts rates, so September 17th is more or less done. Though of course, Friday evening the PCE number will be watched carefully. But if it comes by estimate also at about 2.9%, the market has factored in a rate cut on 17th September. So gold and silver normally do well when the rate cuts are coming. Non-yielding assets, in short, start performing better. So it's one, the de-dollarization, and second is the Fed rate cut. These are the two big drivers. Central banks continue to buy gold in terms of slowly decreasing their dollar exposure and holding gold in their own vaults.
Right. Mr. Palviya, I want to come to you. Two things. One, you would have seen Reliance today. AGM announcements have been there. But if you talk about stocks, it did come off the highs today, and it was in tandem with the market direction. What is your analysis and chart saying regarding Reliance particularly? And also, I want to understand for banking sector per se, because Nifty Bank was, after a while, it was moving in tandem with Nifty, but ultimately it came below a level of around 53,000. So what is your saying in both RIL on one side and Nifty Bank? I know both are unrelated but important for markets.
So during the AGM, we have seen that Reliance tried to moved up, but again on the higher side around 1400, there was a sharp selling pressure. We have witnessed in this counter. Now looking at the closing of today's, its stock now broken its 1380 important support area on weekly chart. On the monthly chart, this is second consecutive month where stock is witnessing negative closing. So if it's continues to trade below 1370, 1380 zone, I think we may see further more profit taking in this counter. And maybe in the down move, stock can correct further towards 1320, even 1300 zone. That's the next major support area for the stock. But if we analyze on the longer term time frame, stock is having a bullish structure. But for near term to short term, maybe stock may remain in range. 1300 to 1440 would be the range for some more couple of week. Once stock crosses above 1440, then there would be a breakout trade, and then we could see rally in the counter towards 1500, But looking at the market behavior and condition, it's a heavyweight stock. So I think we may see some more consolidation for counter going forward. 1300 to 1440 would be the range. Moving to the Bank Nifty, it has broken all its near-term, short-term moving averages, and the kind of short built-up is there in the Bank Nifty. And even if we analyze the most of the large cap bank, like be it HDFC Bank, ICICI Bank, all these banks have shown a sign of weakness, and profit taking has been done in most of this private as well as in the PSU bank. So looking at the overall scenario for banking space, I think furthermore weakness is likely to be there. It's underperforming now to the Nifty itself, and it has almost corrected 4% for this month. So I think the way Bank Nifty has broken all its near-term, short-term moving averages, maybe we could see another leg of selling pressure in the coming week also. 53,400, 53,200 would be the next target. On the higher side, 5400 is the first hurdle. until these levels are not taken out by the Bank Nifty, I think trend is likely to be exhibited on the weaker side only.
Right, and conversely, consumption theme is something which has gained momentum ever since GST announcements were made by Prime Minister Narendra Modi, and we may see some action next week as well. Mr. Bagga, I want to understand with you particularly now. These sectors one should still look at to invest with the valuations being even better now.
Yeah, see, again, FMCG in India is never cheap. You will get it at 40, 50 times. But because there was dependability, reliability, and growth, plus very high ROIs, these are all negative working capital companies. They throw out a lot of cash, plus they run business on vendors and suppliers' working capital. So very fine companies. What we saw last 2 years, the volumes were not increasing. So even if value-wise they were managing some bit of growth, but if you look through to the volumes were really very underwhelming. That is changing. The rural economy definitely has a lot of money in its pockets. And you are seeing that a very strong correlation for the rural economy strength is the amount of currency with the public. The way that has been going up, you can see that there is a lot of money sitting in rural household pockets. Second, the urban consumption was really lagging. That was what was holding back our consumption. I think with the GST cut, that consumer class of 12, 14 crores at the top end, they will get a big boost, and these companies will really get a boost. As I said, the whole picture is about 150 lakh crores getting a 3 to 4% tax cut, which plays out over the next 6 months in terms of consumption. But you could see that as this is orchestrated along with the start of Navratri,
Right,
then
Mr.
Diwali.
Bagga, right. Point taken here. Just one last question before we wrap up our show. Mr. Palviya, in this market, $1 million question, what are those stock-specific picks which we will recommend?
So again, this stock on the long side, that is purely from the FMCG consumption pack. Britannia is looking strong. The way weekly charts are now shaped up, it's now negotiating with its multiple supply zone. So I think Britannia is looking good on the near-term structure. 59, 80, 59, 90 would be the next target. One can buy with stop loss of 57.50. And on the short side, LIC is looking weak. Life Insurance Corporation is looking weak. Stock has broken its 100-day moving average. Short built-up is there in the data. So one can go short in LIC future for downside target of 830. Keep stop loss towards 872 to go short in LIC future.
All right, Mr. Palviya, Mr. Ajay Bagga, thank you so much for joining at this hour and giving your views with this. It's time for a wrap in this edition of Your Trades. Thanks for tuning in.